Hello and welcome to FinTech Diary. Every week we speak to an industry expert who's part of the FinTech revolution. In the world of FinTechs, which is absolutely based on constant evolution and innovation, we question change makers on how they plan ahead and read the future developments. In every chapter of the FinTech Diary, we get the breadth and depth of every segment related to FinTech. My name is Amol Dethe, and my guest for this chapter is Ajinkya Kulkarni, co-founder and CEO, wintwealth.com. Ajinkya, glad to have you.
Thank you, Amol, for having me. It's a pleasure to be here.
Sure. So, Ajinkya, to begin with, I would like you to tell us something about, your dashboard, and give us some sense in terms of how big Wealth is, how many people are working there, and since you are into the wealth management business, or maybe you are allowing people to make more money by investing in your products, how many people have invested in your products by now? And what kind of returns they have generated. So just give us some dashboard on that front.
So we are a 100-member team currently, right? And we basically bring out bonds which give you 9 to 11% fixed return, right? And we launched this about 2 years back. Till now, we have 35,000 active investors who have actually invested, not just signed up, and who have invested close to 600 crores on the platform, right? So that's the scale currently we are at.
Okay. Noted your points. And could you also give us some sense in terms of how many products have you offered till now? What kinds of returns the customers are generating out of that?
Sure. So these are bonds. These are fixed income, fixed return bonds, right? So these give you about 9 to 11%. Different bonds give you different returns, generally in the range of 9 to 11, sometimes 11.5. Right. What we do differently is we are not a marketplace. So we are not just enabling every bond that is available for people to buy. We ourselves also invest in these bonds, and only those bonds where we are comfortable investing, we bring on the platform. So we have a in-house team which actually analyzes analyzes the company, does market research, goes on ground, gets intelligence, and only those bonds that pass through our criteria list are brought on the platform. And we have brought just 22 bonds in last 2 years on the platform. So we are very selective, and we only bring bonds when we are comfortable and we are okay to have skin in the game.
Okay, but give us some logic, as in terms of your logic. Why did you choose specifically bonds or fixed income products? I know the security aspect could be the first one, but people, and specifically the millennials and Gen Z, are able to and are willing to take risks because they want to make more money. So tell us your logic behind choosing bonds or specifically fixed income products.
Yes. So bond is a form factor. So bond is one instrument, but idea is to build fixed income destination, right? So what we realize, like Indians have crazy obsession with fixed income products, right? So if you look at money parked in fixed income products, it is about 7-8 times compared to money parked in equity products. And this is retail investor I'm talking about, right? And majority of that is in FD, right? Then FD returns are low. So people are looking are looking for something that gives them higher return than FD, but is not risky or not as volatile as stock market, equity stocks. So that is the white space we are working on. Assets that give you higher than FD return, but are less risky than equities, right? And that was the idea which we started with, right? So what had happened is, like, my father runs a small manufacturing business. So I used to park all my savings with him. And he had a bank loan at about 12%. So he used to give me 11%, right? And my colleagues used to love it. And a couple of colleagues were very enthusiastic. We want to always also invest in this. And I casually told a colleague, "Haan, de de mujhe paisa," and immediately transferred 20,000 to me using Google Pay. So that was kind of a starting point. That kind of was a spark. So I started digging more and realized, there's a crucial need. People want something that gives them kind of double-digit fixed return product, right? And there will be huge demand. So can we build a technology tech solution and retail tech business around it? That was the initial thought. And that's how we started, right? And bond is a very scalable kind of, not per se bond, but this bonds issued by investment grade bonds issued by A rated or triple B rated. There's a big market out there. So supply of bond is there. So we knew that if we educate well, if we build trust, the demand will come. When we say demand, that means investors who are investing. And when we say supply, that means people who issue bonds, right? So there are enough issuers in the market. So that's why we chose this. And even in bonds, currently we are only confined to NBFC bonds, right? Bonds issued by NBFCs, right? So that is just a starting point. Obviously, we'll build all kind of fixed income products. Recently, we also launched a way for people to know real price of sovereign gold bond in secondary market, at what discount it is available at. And if they can decide, I want to buy it at a 4% discount, and they can set alerts, and when that price hits, they can go and buy at that price, right? So that is like that. So this NBFC bond is kind of a starting point, but eventually we'll do everything that comes under fixed income. And when we say fixed income in Indian investors' mind, it is everything except equity. So people like that. Is very surprising to me. When we spoke to users, we realized people consider gold as part of debt. So they don't think gold as equity. Even real estate is kind of, it's not, they don't consider it as equity, because historically the prices have been stable generally, right? So there is FD plus plus, right? So all these kind of products we will bring on the platform. That's what we are working towards.
That's a good roadmap that I can see, Ajinkya. But tell me something, let me understand some popularity about your products. How many people are, or how many specifically the customers are coming in your platform and, investing on their own? And also, how many customers are you retaining on in terms of their investing, like on a recurring basis or something like that?
I think 35,000 people have invested once. More than 10,000 people have invested twice or thrice, right? So there has been repeat, and obviously, we ran a survey and realized about 90% of them had never invested in, 95% of them had never invested in bonds before. So this is the first time they are actually investing in bond as an asset class. So they're pretty slow, and we also like that. Like, people should go slow, right? They should understand asset class and then double down once they have better understanding, right? So about 10,000 people have been repeat, and repeat behavior is generally really strong in this segment. In fact, today only we brought a bond of 20, which was, the issue size was 20 crore. It got sold out in 15 minutes, and about 90% was subscribed by existing investors.
Quite interesting, Ajinkya. Let me understand more from your point of view. So, are you putting any timeline in terms of how long people should invest, so that maybe you can offer them XYZ number of returns or something like that?
No, so we are not a asset manager or something. We are basically a platform that lets them invest in particular bonds. So when they see a bond, they know this is the tenure, this is the repayment schedule, whether interest is monthly. So we are not offering any basket as such, or we are not applying any label, like a wrapper of our own on top of it, right? So, but generally these bonds have tenure of 2 years or less than 2 years, and return in the range of 9 to 11 after recent interest increase, generally in the range of 10 to 11.5%.
Okay. And how do you make money? You charge a platform fees or something to the NBFCs which are offering bonds, or to the customers? How do you actually manage the business?
Yeah. So most of these bonds we buy from secondary. So we don't make money from NBFCs, but generally we charge 1% of the issue size, and that we charge by increasing the bond price. So there is a difference between coupon rate and YTM, and that's how we make money.
Okay. But any number in terms of exact profit that you make? Are you profitable right now?
We were profitable very early on, but since we are investing a lot in growth, we are not profitable. And obviously we are venture funded. So we have that privilege, right, to invest in growth currently. We make about 100K, 70 lakhs a month in revenue currently.
So how has been the response overall in terms of the market? Because when it comes to investments, like you said some time back, the fixed income is quite popular, but people still prefer a typical fixed deposit when it comes to fixed income, and try to stay away from market. So I'm sure you must be using a lot of data and analytics also in terms of why people are investing, what they want to do with it. So what's your understanding of the market? Has it really changed? Because I have been listening this since more than a decade now. There is no financial inclusion is a challenge. People are not investing in market. The penetration is really less. So what is your view now?
Post 2016, the penetration has gone through the roof, right? And when I say 16, that is when Aadhaar became online. Generally, the KYC and everything have started become online. That was, I guess, major breakthrough. And then COVID propelled that probably 10x, right? So I think, I think 10 years from now, most of the investment decisions will be made online. Currently, investment transactions are online, obviously, yes, already. But investment decisions are majority still offline. I think in next 10 years that will also change, even for the existing people. And in obviously obviously most of the new onboarding or most of the new investors are coming in fold of online ecosystem, right? So the tailwind is huge in general for wealth products.
Okay. And how do you review the whole bond market? Because till now there were a lot of limitations. I mean, perhaps a typical retail investors could not have participated in bond market because of its ticket size or a lot of other technical issues directly. What is your analysis in terms of offering bond as one of the important product on your platform?
Yeah. So, firstly, I mean, obviously, ticket size was a constraint, public issue, and all. Like only 2% of the bond were publicly issued. In privately issued, the ticket size was 10 lakh, so they were not accessible to retail investors. Now the ticket size is also coming down to 1 lakh. But the real, I guess, headwind for a bond market is actually arbitrage in FD, right? So in FD up to 5 lakh is kind of comes under deposit insurance guarantee, right? So whichever bank you make it, whether that bank rating is AAA or double B, whatever it is, up to 5 lakh, it is secured, right? And you have some banks offering FD at 4.5%, and some banks offering as high as 8%, right? So there is a clear arbitrage, right? So, and if you look at, let's say, AAA rated bond, their yield will be less than a FD of a small finance bank. So for retail investor, it doesn't make sense rationally, emotionally, anyways, to invest in a AAA rated bond. So if he's taking up that risk, right, because if you're not investing in FD and investing in a bond, you're taking certain additional risk, right?
Right.
So for that, there has to be some payoff, at least couple of percentage points. So the yield has to be FD plus 2%, and that is only possible in BBB and A rated entities. And these entities, by definition, are like risky. So there has to be someone who builds trust, who does due diligence on these entities, and and figure out which what is an additional kind of parameter or credit mechanism that you put to select bonds, and basically educate investors why these are good, why these are bad, right? And that's what we are doing. So if you look at all the bonds, these are A rated and BBB rated. We haven't bought any AAA rated bond, because as a retail investor, it doesn't make sense. Even I wouldn't invest in a AAA rated bond. I would rather go in book a FD in a small finance bank. So that is one tailwind. And second, if you look at another, and we expect this to change, is there is a taxation arbitrage. So if you look at equity stock and equity mutual fund, the taxation is same. But if you look at bond and debt mutual fund, taxation is different. There is no LTCG on bonds, right? I hope once that change, I think there will be a lot of tailwind for bonds, and we hope that it changes soon. So I think these were two crucial factors. But so the real opportunity lies for retail investors is to invest in A-rated and BBB rated bond, where the risk is mitigated well. So they get at least 2-3% more than FD return, but the risk, obviously there will be some risk. That risk is mitigated well. That's the real opportunity for opportunity, or that is where the market is, open market is currently.
Let me understand your perspective in terms of the typical risk and the return formula. So in a way, there are two sides. One, Indian consumer is also very greedy, and they are also very reluctant to take risks. I mean, both we have seen people in the past, and they are already there. So how do you see the market in terms of the risk appetite? Because when you are saying bond or the fixed income, generally the returns are not as exorbitant or maybe as high as you can get from the multi-baggers. Maybe what other wealth management platforms can provide, which are dealing with the stocks directly. I'm talking about the equities, right? So so by any chance, do you think that you should also add such products on your platform going ahead? Platinum. Point number one, or will you continue to stay in a fixed income format? Because what will happen is then you are going to be a little limited and cater to only one segment, which is very, very conservative.
I don't think we'll be entering equities anytime soon. We will be going deep on on a fixed income market. We obviously see value in equity market. I mean, if you ask me, anybody will have a guy of age 30 will have majority of portfolio in equities, and that makes sense, right? Equity creates wealth. But at the same time, fixed income is also important part of your portfolio as a mainstream portfolio. And I'm not like we don't think bonds or anything is alternate assets. Like they are part of your mainstream portfolio, and somebody needs like, and you will have some allocation, and you will need some expert platform, some platform which provides this very detailed and very educative view of them and enables transaction on top of it, right? So we will stay in that market. Now, if you ask me, like obviously greed is high on equities, right? Our target group is also not people who are Gen Z. Our target group is people from age 30 to 50. So we are a very different kind of TG we have, right? Because if somebody who enters a stock market, their general expectation is 15% XRR banega, 18% XRR banega, right? And that greed once somebody, that greed drives actually adoption, right? Therefore, you saw a huge adoption in COVID, right? But once somebody sees a cycle, right? Now Nifty for 1 year has been going sideways, right? So then people understand that 10-11% T is, and people see even in mutual fund in large cap 10 to 12 के आसपास बनता है या थोड़ा ज़्यादा भी बनेगा. So in short term, if I want to park, these debt instruments are needed, right? So somebody who has seen that little down cycle of a stock market is kind of our TG, right? And we often say this, it's not our job to convince investors that 10% return is great. Our job is to bring great assets for investors who are looking for 10% assets, right? So if you look at our whole copywriting, website, webinar, everything, our social handle, we never try to sell कि ये बहुत अच्छे product है. We're saying, if you want such kind of products, here are good products, consider them. Like we'll educate you, then take an informed decision.
So basically trying to play as safe as possible. Interesting, Ajinkya. How are the investors, looking at you? How many investors have invested in your company? What are the next rounds of funding are you looking at? And how much is the total investments that you see in your company maybe going ahead in next 2 to 3 years?
You're talking about equity investors of
yes,
Winter?
Yes.
Yeah. So we've been backed by marquee VCs. We've raised $20 million till now. Across different rounds. The response has been great. I mean, we are creating a category creation play, right? So when it pays off big, right? And that's what investors are betting on. We'll see. I mean, we are still pretty small, right? So we'll see how it goes. But I think there is a tailwind from the regulator is behind. They want to deepen the bond market. For economy to grow, it is clear that bond market has to deepen. These businesses have to have access to retail capital to grow. Otherwise, the 5 trillion economic goal will not be possible, right? So there is strong tailwind, right? And regulator has been supporting even when the regulation is coming. They invited us. They asked us for suggestions. We gave them our suggestions. Many of our suggestions were accepted, right? So there is a strong tailwind. From equity investors, I think these are all venture investors, right? So their risk appetite is pretty high, right? So we'll see how it plays out. But in terms of finance, we are pretty solid and we have strong runway.
So in a way, you actually touched a topic which I wanted to discuss, and that is about regulators. So the regulators are kind of supportive to fintechs. That's what we have seen. But it may be possible that you will fall under two regulators. At one side, RBI is trying to revolutionize the bond market for sure, but because of you're into the wealth, you will report to the RBI. You will report to the SEBI, which is actually crafting some norms that you said some time back here, and that is in the pipeline. SEBI chairman also said very recently that a lot of fintechs are, kind of building the whole innovation model under the thinking that perhaps the regulator will not look at them, but that is wrong. So my question to you, Ajinkya, is how prepared are you in terms of tomorrow if regulator actually comes with some strong regulations and ask you not to follow these 10 things, or maybe they put you under some restrictions, and then there is a policy, so you cannot be as innovative as you are right now, right? So are you prepared for that? And what kind of difference do you see, or maybe you have seen or taken into consideration into your business going ahead?
Yeah, so that's a very right question, right? So I like, if you ask me, I'm very pro regulation, right? So I have seen that many of our peers have been mis-selling, right? So the regulator has to come in and save the retail investor, right? And now I also firmly believe that if we have to scale our business, it can't happen in an unregulated space, right? So it might put some teething problems for 3-6 months, right? And we'll get over it. What we like and what we expect from regulator is they tell us very clearly what they are expecting, and we'll rather follow it, right? And if you ask me, we like, and when it comes to wealth space, right? It is mainly about educating the investor and not mis-selling them, right? Making sure that they understand risk. The kind of risk disclosures we have on the platform, we take super pride that no other platform has it. If you invest in any bond, you have to clearly we educate about you the risk. Once you click on invest now, once you have made a buying decision, there are 3 screens where you have to click I understand, which are just educating you about the risk, particular to this bond, particular to market in general, particular to this asset class also, right? Only when you click I understand, then only you can invest, right? So there is a lot of self-regulation that we already do. So in fact, we were of the opinion that regulation should come, because that makes sure that only serious players stay. Second, it makes us stable, right? What if I build something and regulator is not favor of it, and I've scaled this a big time, and then business has to shut down, right? We are still pretty small today, right? So if there is any regulation, we'll obviously have teething issues. I mean, but it's in the interest of the company, and it's also in the interest of the retail investors, right? If you're not serving retail investors, you need not be here, right? You should not be here. So I really like, and more I've interacted with regulator and have seen how people act out of greed, especially the entrepreneurs. I have become very pro regulation. I think regulation is very much needed, right? And like it is in long-term interest of us as fintech entrepreneurs, because if things don't get regulated and suddenly something goes wrong, the reactionary regulation will be much more harsh. It's better that today regulation, in our case, regulator first came out with consultation paper. They gave us time to respond. Then they invited us to present our suggestions. And then we are already seeing some of these suggestions accepted, right? Which is a much better way of developing this ecosystem together with the regulator.
Okay, noted your points. So in the fintech space, Ajinkya, I have seen a lot of fintechs operating in payment, credit, SaaS model, but very few specifically on insurance and a wealth side. But considering your kind of trying a niche, again, there are a lot of wealth fintechs or wealth tech startups still operating in equity and stock market that we discussed. How do you see the fintechs operating in wealth will shape up going ahead? What kind of growth opportunities that you see for the fintechs operating in this space for you and the others as well going ahead?
Yeah. So obviously, I mean, like when any tech adoption happens, these are like first payments hoga, then lending hoga, then wealth will come into picture, right? So because now people have been transacting online for last 5-6 years, it makes it, they have certain confidence to make investment decisions online. So wealth will, like, you'll see a lot of now wealth related startup in next 10 years, and wealth tech being unlocked in next 10 years, right? In wealth tech, we constantly see 2 themes, right? One is in very wealth related terms, one is providing alpha and second is lowering beta. So alpha is basically some additional yield over the benchmark, and beta is lowering risk, right? So if you look at like most of the adoption that will happen across products which are providing alpha, right? But the biggest risk there is actually that alpha being delivered, right? Only then the products will scale. Lowering beta is not a great adoption tool that we have seen, right? If any tool or any product just offers lowering of risk across portfolio etc., we haven't seen them actually gaining a lot of traction. But anybody who is promising alpha or not promising alpha, but who enables catching that alpha actually scales. Whether that alpha is delivered, that defines the sustainability or scalability of that product platform etc. But a lot of traction or action is happening where people are chasing alpha.
So Ajinkya, I liked your analogy, but what I see, most of the fintechs operating in the wealth space or specifically, the personal finance space, the target is to basically acquire as many customers as possible. And maybe then, their idea is to maybe they will craft some customized products because we are heading towards a hyper-connected world is what one theory is. I do not know how successful will that be, but what kind of, there is one alpha model that you spoke about. But going ahead, do you really feel that India has a potential specifically for the wealth management fintechs or wealth tech companies? Because what has also started happening very recently is most of the banks have started their own divisions, which is taking care of their own customers. If you look at Axis, they have their wealth team, then SBI, then all these banks or ICICI have their own wealth teams, and it's quite easy for them because they have a customer there. They know, in fact, how much money is in the customer's account also. And the moment you go to a branch, also they are immediately offering you multiple products. So, do you see, this space? Do you see a competition in a way between the wealth tech and the banks going ahead, and what will be the way out?
Yeah. So there are two questions. I'll answer them one by. So the primary hypothesis of fintechs today is will scale fast using some product, and there is no need to customize products. Also, what we have realized, they are going back to same old tricks of making money by selling insurance, by lending money, by offering brokerages, and there is enough money to be made, right? So most of the fintechs, whoever scales, will make money through this. Right. And there are enough examples now, 3 years, 4 years back, this was not proven, but at least today I know 5 startups which are making tons of money just by selling insurance, by lending money, by offering brokerage services. Right. So that hypothesis is kind of proven now. Right. Now coming to banks versus fintechs, I think wherever there is a personalization element that will come, banks will win. Wherever there is technology element that will come, the fintechs have right to win. It is just because of DNA, right? And that is basically a price point, in my opinion. If you, let's say, have a 15-20 lakh salary, it's very hard for anyone to offer you a personalized service. So only a technology solution can deliver you value. And banks today don't have that DNA as such, right? Probably unless we see some example, most of them are under investing. They don't even appreciate it. And when they say technology, it just not means investing on technology. It means investing in consumer psychology and consumerness of it. And obviously the things are changing, so I don't know how things will be in 5 years. Obviously these banks are run by pretty smart people, right? But today they're under investing a lot, and it is because of lack of focus or lack of appreciation for the impact that technology can create is what I'm seeing. So, but wherever personalization comes, right? When you mentioned Axis Bank or any bank which has a wealth outlet, they're catering to HNIs where salary is generally above 50 lakhs and above. None of them are actually creating wealth solutions for somebody who has a 6-7 lakh salary. And that's where the fintechs are thriving and going to thrive.
Right. I think that's a very valid point. Ajinkya, we almost come to an end. Let me take last quick 2 questions. One is specifically about your observations, your feedback, your perspective on the fintech ecosystem of India. We have seen great rise in the India's fintech, and most of them are also now trying to go abroad or maybe cross their boundaries. So, one, how do you see the fintechs in India right now? What kind of future do they have according to you? Or you see, major challenges in the fintech ecosystem right now because of the funding has been, kind of slower or lowered in the recent past?
Yeah, I mean, obviously, I have a very biased view here. I run myself a fintech, but obviously, I believe the future is very bright. Funding cycle, I don't worry much because these are cycles. I mean, it's not that first time there is a funding crunch. That was there 5-6 years back also. Then there was whole boom, and then there was 2008-21 ka crazy funding, right? And now we are again, there is kind of a winter, what we are seeing, and obviously things will improve for you. So 10 years down the line, this won't matter, right? If you have survived, if you couldn't survive, then it matters. But if you survived, it wouldn't matter, right? So I don't think funding is a problem. I think fintechs that will adjust to regulation very well and in that regulatory framework keep innovating, will have a bright future compared to unregulated ones or somebody. Or obviously there will be some sectors where regulator will not be okay with innovation, right? And because they might think this is very harmful to ecosystem in general. So these sectors will not perform well. But in general, fintech, I think whoever adopts to regulation well will do well is what I see.
Sure. And the last question, again, you partly mentioned that your goal is to, maybe reach on the top in the fixed income arena. But what next for you, or where do you see yourself maybe in next 2 to 3 years? Do you plan to become a unicorn? Do you plan to become a regulated entity? Or, how many customers do you think you will have by next 2 to 3 years? So just give us some future roadmap.
Yeah, I think uh, being unicorn is not something that obviously we will become someday, that we know, right? But itne time mein banna hai, like we have to become in this time, and other that's not how we operate, right? We are here for to play a very very long game, 20-30 years long game, so we have to keep serving the customers. In terms of business metrics, I think our next target is to reach 10 million of revenue, annual run rate revenue, right? That's the focus. I guess in next 2 years, less than 2 years, we should be there, right? So that's the focus currently. Other than it, obviously, we are becoming a regulated entity. We are just waiting for regulation to come, and we will become a regulated entity. And we will apply sometime. We'll apply for an NBFC license and bunch of other regulatory licenses, and making sure that we are regulated enough.
Sure. Noted your points, Ajinkya. That was quite meaningful. I must say thank you so much for sharing all those meaningful thoughts here. That's a wrap, ladies and gentlemen. Click on the FinTech Diary, tap to your previous episodes. If you like it, please don't forget to share it on social media. Also, please ensure you have subscribed to our daily newsletter, which is absolutely for free. Thank you so much for watching FinTech Diary on etbfsi.com. Stay tuned.